Thursday, August 9th, 2018, Monaco 64, home of alternative economics and contrarian views. This morning I'd like to talk about the end of Britain, and that's a title to a video made by Money Week, which I'll put up in the link above in the description. It was made in 2013, so it's 5 years old. But nothing has changed since they made that video, and I'll touch upon that after I look at the markets this morning, what they're doing. Why am I doing this video now about the end of Britain? Well, because I think things are not looking good. The pound seems to be almost in free fall. The only thing holding things up right now for the UK are interest rates, which are still under control. And I'll come to that later, about why they're under control and what it's got to do with the end of Britain. So it's just going about 8:40 a.m. London time. Spot gold is down a little bit this morning here. It's 12.1160, down $2. The range has been 12.1050 to 12.18. Silver's down 4 at 15.37. So yeah, precious metals are a little lower right now. The Dow is down 32, 25,524. The S&P futures down 2 3/4 points, 28,554, and the Nasdaq 100 future is down 5 points. So still not much going on there. Currencies are a bit weaker this morning. The pound continues to melt down. We're now down 0.25%, and I think that's what's taking gold down a little bit here. The Europeans, probably the Bank of England, they're constantly manipulating, cushioning the fall of the pound by selling, keeping gold also under pressure. And in spite of that, though, we're up about, I would say, 10 pounds this week in terms of the sterling price of gold. I think it ended around 933 last week. We're now 943. So there's this constant battle here to keep the pound from really losing control, in my opinion. So yeah, a cable is 128.54, down 30 pips or 0.25%. The euro's back down below 116. It's at 115.84. Down 0.25% as well. Dollar yen is fairly steady, 111.04, not moving around. Dollar slightly higher than with the yuan at 682.80, only up 0.06%. Crude oil is down, back down below 67. So we've had a fairly big move down. We were above 68 yesterday, so that's probably helping the situation for Britain at the moment. But I've heard that my wife was telling me that British gas has raised prices by 8% year on year. So to tell us that we have no inflation is just very deceptive. I guess for the Bank of England, the guys at the City of London, the mainstream economists, they believe in this rubbish that inflation is like 2%. And that they need to keep it there. It's more like 5 or 10, guys. So that's what's going on in the markets. 10-year yield is 2.95, not really moving too much. So let's go and talk a little bit about this video. I couldn't really find it on the Money Week the YouTube channel. I found someone else who's published it here. It's about an hour long. I'll just do kind of a brief summary of it. I think it's better that you watch it yourself if you're interested. Basically, they're saying that the UK has unsurmountable debts. And that debt has grown a lot since 2010 and the 2008 crisis. They note that when the Conservatives and Liberal Democrats came to power in 2010, the national debt was $700 billion. At the time they did the video, it was around 1.5 trillion. Now it's over 2 trillion. And they touch upon how the welfare state began in the UK, back in the early 1900s, how all the wars have created debts as well. I would point out as well that the collapse of '08 and saving the banks and the City of London, the 1%, is another thing that has cost the UK a lot of money and a lot of debt. Yes, the mainstream and especially the left, they keep saying that we've had austerity of the welfare state, we've had cuts in the welfare state. Maybe we've had, but we haven't had austerity and cuts in terms of government spending. Because how can we have austerity and cuts if the national debt has gone from 700 billion to 2 trillion in less than 10 years? So where's that money going? Well, that money is going to save the banks so they can take your money and lend it back to you at interest. That's the big deception, the big fraud. So how come are you going to say, well, they're wrong, this video is in 5 years ago? Well, they do note that right at that time, interest rates are still quite low, around 2%, and that Britain could carry that debt. They didn't realize, though, that they're going to be able to manipulate interest rates even lower for the next 5 years. And even now, you look at the UK gilt, even today it's down 2 basis points, even though our currency has been melting down. It's only at 129 now, and it's only up 18 basis points this year, in the last year. So how come when the Turkish lira collapses, or the Venezuelan bolivar collapses, or the Russian ruble collapses, or any other currency melts down, their interest rates go up, but ours don't? Well, I would say it's because there's heavy manipulation by the major central banks. And that is the key that I'd like to point out. As long as they can keep these interest rates low, as long as they can keep the gilt market under control, unfortunately, they're going to keep indebting the public even more. They're going to keep destroying savers. Yeah, I bring the fable of the boiling frog. It says the boiling frog is a fable describing a frog being slowly boiled alive. The premise is that if a frog is put suddenly into boiling water, it will jump out. But if the frog is put in tepid water, which is then brought to a boil slowly, it will not perceive the danger and will be cooked to death. So that's what's happening right now to UK, the general public, UK savers. Yeah, they're being cooked to death. The government, the monetary authorities, the City of London, they've been able to keep the deception. They've been keeping the water really tepid, interest rates under control. But if interest rates were to rise, were to spike, then the frog will probably jump out. And that's when you're going to have a huge crisis and everything will implode. And we need that because, as the End of Britain video points out, it's not just the national debt, the public debt, government debt that's out there. There's off-balance sheets or unfunded liabilities of the government for pensions and other public services. There's also the consumer debt that has been growing even more since 2013, I would say. There's corporate debt. So it's a huge problem. And people will tell you that it's because of Brexit that this is happening. But keep in mind, this video was done in 2013. There is no talk of Brexit then. And if you look at a chart of the pound, look at where it was in 2007-8. It got even above $2, and it's been decreasing ever since. Brexit is just like a cover or a scapegoat, and I've said that many times for the last 2 years. Yes, it doesn't help the stability or the certainty of things for business, but I don't think if we didn't have this referendum, I don't think things would have changed. All Brexit has done is put the spotlight somewhere completely different than where it should be, which is the debt, the City of London, the Bank of England. That to me, and I was saying that in 07, 08 when they came out with the bailouts and indebted the public and have been indebting the public since then. How can it make sense that they lumber all these trillions of pounds of debt on our shoulders, right? So they can keep these banks alive and their monetary system, fraudulent fiat monetary system going, so that then they can take this money and lend it back to you at interest. How does that work? How perverse is that? Yeah, and that's the other thing I want to say. We need to focus on the mechanism of the system. We need to put aside divisions between races, color, creed, whatever. They want us to do that. They want us to keep us divided, and that's why I try not to touch upon that ever. We need to just look at how screwed up our system is. So that's what's going on. The end of Britain, and look at the pound. I mean, this is not normal what's going on. Look at the short-term chart here of the pound. How, let's see, since April, we were at 143 and now we're at 128.50. And I can tell we've broken some really key technical levels. There could be some support down around 127, let's say 70, which was an important low in August last year. But other than that, we could be in free fall. What could also trigger maybe the frog jumping out of the pot, realizing that they're being killed? Well, it could be the fall of the government and maybe even a change of regime from conservatives, right, and Labor. I think, am I saying I disagree with, I'm not a Labor nor conservative. I never vote. But Jeremy Corbyn, I think, would be perceived by the markets as a no-no, and that could be the trigger for a spike in interest rates. That could be the excuse. I talked about yesterday how the head or founder of the biggest stockbroker in the UK, Peter Hargreaves of Hargreaves and Lansdowne, said that he thinks his fortune could be almost wiped out if Jeremy Corbyn became prime minister. So that could be the trigger. Who knows? But am I saying I favor his policies? No, but it could be what wipes out the slate clean and and gets this country going again, because for the last 10 years, we just the frog is just being boiled and boiled, and it's going to die sooner or later. So what do we need to keep an eye on? The politics a little bit and the interest rate. Right now, the UK 10-year yield is only 1.29. Also keep an eye on the pound or cable. If that continues to really accelerate lower, we could see the yields there spike higher. But what should normally be happening with the pound dumping like it has like this in the past 20, 30 years ago, the Bank of England would be raising rates, trying to defend the, how can I say, the currency, right? Nowadays, they don't give a damn about the currency. They just let it like melt down, and that's killing savers and indebting the general public more and more in order to keep the bankers going. Am I against bankers? Not particularly if they're honest and we have an honest monetary system, but the current system is not good. So there we go, the end of Britain. I think I know that video is from 5 years ago, but we're much closer to it. And the only way to protect yourself, as I've been saying like a broken record the last few years, and I'll keep saying it, is physical gold and silver. Do your homework. I'm not here to tell you exactly what to do, but there's Google today. You can Google everything and find out how to get the precious metals and protect your savings from confiscation via inflation and currency debasement. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and Twitter. And also in this age of shadow banning, of demonetization, it would be nice if you'd like to contribute to the channel or donate to the channel. There's some links below in the description. There's even the store with some merchandise, Billy merchandise and the Fed merchandise, all about sound money and sound economics. So I'll talk to you later. Take care. Bye.